Going on in the auto market, where the latest US auto data showed that sales growth steadied in the month of October despite economic headwinds. CNBC's Phil LeBeau has the full story.
Despite higher interest rates and concerns the economy might be slowing, U.S. auto sales remained robust in October. The foreign automakers all showed healthy numbers. A couple of things stand out. First, demand for gas-electric hybrids is not slowing. Take Hyundai. Its hybrid sales jumped 21% last month. A similar story for Toyota, which leads the U.S. in hybrid sales. They increased 38%. As for concerns about higher interest rates potentially scaring away buyers, the impact has been limited. The pace of new auto sales remains relatively strong in the U.S. It also helps that the supply of new vehicles at dealerships did not take a big hit because of the United Auto Workers strike over the last 6 weeks. And those inventory levels should steadily improve as the industry heads towards the end of the year. Phil LeBeau, CNBC Business News, Chicago.
In earnings news, Toyota doubling its operating profits to a record $9.5 billion in the second quarter, partly due to a weak yen, which boosted sales. Toyota's profit margin now outpaced Tesla's for the first time in more than 2 years. Stellar results also prompting the Japanese automaker to lift its full-year profit outlook by 50% to nearly $30 billion, and it rolled out a $100 billion yen share buyback. Toyota stock climbed nearly 5% in late Tokyo trade yesterday following its earnings. In a separate development, Toyota also raising wages of its non-unionized U.S. factory workers. This comes just days after the United Auto Workers Union secured pay and benefit hikes from Detroit automakers. Let's get more on Toyota's numbers with Lauren Fix, auto analyst at Car Coach Report. Lauren, thanks for joining us. First of all, what's your take on EV demand slowdown and the associated inventory glut? And is that to Toyota's advantage if it means hybrids will make a comeback?
Absolutely. I mean, think about the Toyota Prius. It's their #1 selling vehicle as far as in the hybrid marketplace. People love that vehicle, and they just revamped it for 2024. One of the biggest things we're seeing is consumers that have electric cars find there are some limitations. Insurance rates are higher, having a charging system in your home or access to one that's quick enough, because we're an impatient society. And so because of that, Toyota has not transitioned to full battery electric like other brands such as Volvo have said, we're going 100% electric. Toyota has decided that, and it's actually a very smart move, to wait it out, see what happens, because the federal government is pushing it here in the U.S. and in other countries. And now we're starting to see the consumer say, you know what, we're calling the shots. Supply and demand, look what's sitting in the lots, and look what's leaving. Hybrids and plug-in hybrids are very popular.
That said, Lauren, Toyota's investment in the North Carolina battery plant, that's the largest by a foreign car maker since the Inflation Reduction Act was passed. How central is this to Toyota's EV ambitions?
Well, they're coming up with some other technologies, including solid-state batteries, using hydrogen as partially to use with electric or to use with combustion engines. It does work. We've seen it work. They're working on all these technologies because they know that this has got to be an answer, because the cost of batteries is so expensive and all those raw materials, which is mostly owned by China. So we can be beholden to China or the Middle East. So they're coming up with other options. Having that battery plant is very advantageous from a tax standpoint with the federal government, but also still being able to offer hybrids that are part of the plug-in hybrid that's going to use those batteries as well. And owning your own factory in a non-union state is really smart.
As expected, the UAW deal has put pressure on foreign automakers and, of course, even US automakers like Tesla, who have non-union workers. It puts pressure on all of them to increase wages, which, of course, Toyota has done. Great for the worker, but what is the impact of the bottom line for Toyota?
Well, you know it's going to be the same across the line for all the manufacturers. You're looking at about $1,000 to $1,500 increase. Yes, they can cut in some other areas, but there's other areas like R&D and some of this new development and technologies that cost money, cost a lot of money. And though what I don't think a lot of people understand is, and we do obviously, because this is our industry, and you understand as well, but the average consumer doesn't understand when they hear sales, they think that's pure profit. They don't understand that there's overhead costs. They don't understand that a lot of this goes back into R&D, hiring new people, hiring specialists from other fields, using new technologies. And so because of that, you're going to see the price of vehicles go up, and the UAW strike certainly caused that because every manufacturer is going to have to step up their hourly wage, offer cost of living increases. Even though they're non-union shops, they still have to pay their workers a fair amount.
If the costs of the cars go up, then would you see a material impact, a knock-on effect on consumer demand?
Well, I think you're looking at $1,000. I think we're not always shopping for cars every single day. It's not like food. So if you go to the dealer and they say the vehicle's instead of $33,000, $34,000, you may not really see the difference. And for the average consumer, when they do go looking for a vehicle, they just figure it based on a monthly price. Although that's not the best way to buy a car, you're starting to see consumers understand that this is part of, they can make numbers work. So the finance and insurance guys at the dealership or gals, they can extend out lease dates. So you're seeing leases getting as long as 48 to 60 months. It's ridiculous and not good deals financially, but consumers do that in order to lower the price and get the vehicle they want. So they probably won't see $1,000 or $1,500 price increase as an impact to them initially. They'll see it when they have to extend their lease term.
Lauren, so we all know how Toyota has got a lot of stick for not being fast enough in the EV game and being late to the party as well. So does the North Carolina investment and, importantly, the work they're doing with solid-state batteries, to your point, which promises 1,200-kilometer range, does that mark them out as a serious contender then in the EV field?
I think they're still a contender. I mean, the BZ forecst has not been a big winner for them. They're sitting on lots. They're really unique looking, but they, compared to what's out there from Kia and Hyundai with the 800-volt architecture, which is quicker charging, or some of the other brands like Volvo coming out with their EX30, which is going to be a big seller. These are kind of things you start looking at and you realize that they have to do something in the marketplace because consumers will walk away from that brand. And it's all about brand loyalty, getting them to come back. You don't want to lose customers, but then you also want a conquest from other brands. So being the only game in town that might offer gasoline, hybrid, plug-in hybrid, as well as electric, that might be something that causes people to look at Toyota. They've got a great reputation, especially here in the U.S., low cost of insurance. And when you look at the new Prius, it's a winner. It's running for a North American Car of the Year, as well as in the World Cars group. So I think that we're looking at a pretty impressive lineup, and Toyota has changed both their Toyota and their Lexus lineup, and I think this is a really smart move.
The Japanese yen, Lauren, has taken an almost one-way trip downhill, down Mount Fuji this year. How beneficial to the financials of Toyota has that weaker yen been?
Well, remember, when you're looking at a company like Toyota, they're a large part of the Japanese economy. And so when the yen gets weak, it could be to their advantage or not. With the U.S. dollar having its own issues, as we all know, really what they're looking at is they're riding an upswing on all-time high quarterly earnings. And Toyota is just doing great things for consumers here in the U.S. and in North America on a global basis. They're trying to fight everybody out there. And the Chinese are putting out a lot of cars. So they're also fighting other manufacturers like Honda, Nissan, as well as all the Chinese manufacturers. Literally everybody's fighting for your dollar, and you're starting to see that with consumers. They're starting to realize there's a lot of really good product on the marketplace, and I think that having that available to consumers, letting them make the choice, you're going to find out who the winners are pretty quickly.
And of course, as you say, we the consumers also win. Lauren Fix, awesome insight. Thank you so much for joining us today from Car Coach Report.